Yeah, I was going on around with several muted. It's my damn class. Lord, Lord, Lord. How's everybody's week? Type in the chat if you don't want to talk. That's good. Give me 1 second now. All right, all right. All right, so right on time. I know, right? All right, everybody. Appreciate y'all coming. So first we're just kind of gonna go over I think what are we gonna go over first? First we're gonna go over how I trade, right, on a day-to-day basis, especially when you have range days, right? So one of the first things I do when I have range days, that I like to look at both ES and NQ together. And the first thing I do is once the 8 o'clock session starts, I like to put a 5 minute ORB over the first 5 minutes of the section for both ES and NQ. Reason why is because a lot of times you'll notice that throughout the day, we will make moves off of this level, right? Or you'll see divergence off of this level, right? We'll do that one. Now, the next one I like to do, right, is I like to go to the 1 minute, right? And I like to draw a 1 minute ORB over the 1 minute. All right. And I do this on both. All right. So where we at? Thursday. Well, I don't. Yeah. I would let you know everyone trades ORBs, everybody trades everything different, but but this is how I trade. This is one of my discretionary tradings, right? So when we have price, right, and if we are above your 1800 and we are above the 930, you should be specifically looking for longs. You should wait until price gets above it, holds to 50, gets above it, or gets above it, holds to 50%, take longs. On the flip side, if we're below 1800 and we're below 930, right, you should be looking for shorts. Now, in the middle of it, right, if we're not above or below, one of the things I like to do is I like to look for diversions, right? I like to see, let me make sure I lock these. I like to see where we have um where we hit certain levels, right? And the important levels for me are always going to be these levels for each box, right? your high, your low, and your 50 and your mid, which is your 50%, right? The reason why those are important because a lot of times you'll see divergence there, right? So let's look at this here, right? So here, right, we're below or we tap into the 50%, right? Where are we here? We're not there yet, right? This one we tapped to 50%, but where are we here? At the bottom of it, right? You see the placement divergence? We're here, right? You see that we are rejecting right at the top of the 930, but above we're slightly above here, right? You see how down here we're at the 1800, right? And but you don't catch it here, right? So what you can do is you can use precision trading. When I say precision trading is you can anticipate to a certain degree as we move up here. You see one go a little further, you see one stop. You can put your order there, right? And have a very tight stop as long as you get something like a color change type thing, right? You can either take the first, you can anticipate it, or you can take it after you see a color change and a direction change, right? Same here. Color change, take it here, right? Same thing, right? Same thing here. Come down, color change here, right? So in a situation like here, right, where you have we're at the top of here, we're at the bottom of here, right? Now we came down, hit this, hit here, right? Now you could have taken the trade here, right? And there's nothing wrong with it, but you always remember have a tight stop. So it could have been 50%, or it could have been 10 points. I say anywhere between 10 and 20 points now that volatility is a little higher, right? Because that gives you enough space, right? Now, mind you, you take this loss on NQ, right? What happens when you take this win on NQ, right? Same stop or same amount of stop, basically, same stop principle, right? Right below the 50%, you get a push up, hold here, same placement. We don't dip that far, right? And we move up, right? Keep on moving, right? You'll see the same type of thing where we don't, a lot of times we don't, the market will show its hand, right? And you'll see it, right, throughout the day, especially when we range, right? Now here they actually hit it kind of on, kind of very close, but you can see one tapped it, one did not, right? One tapped into the 50%, right? One did not, right? One tapped into the 50%, one did not. One tapped into the side of the body, went all the way up, one did not, right? This was outside of trading for most of you guys. So when we range, it's very important to know this, right? To know that we do this type of thing, right? And look for precision trading, especially if you're with futures. If you're trading options, this becomes a little bit harder, and you have to be a little bit more precise, and you have to kind of, be okay with taking those 20-30% trades, especially at the end of the day. Now, when you get towards the end of the day, if you catch precision, right, you can get 50 to 100% a little easier because the theta decay is, the theta has ran out, right? But towards the beginning of the day, if we're ranging, you have to be careful with that, right? Let me see if I can go to a different day. What was another day that we? Give me 1 second, y'all. See if it happened here. All right. Yes, billionaire boy. The box is the high and low of the 930 candle. Gonna give me problems. All right, come on. Let me do this. Give me 1 second. Yeah. Let me do that. For some reason, every time I get in Discord, it's just super slow. Which one? 930 testing. There we go. All right. So let's go back to Wednesday. All right. So it's Wednesday. All right. So I marked out a few of them from the Wednesday and during the day, right? You see how not here, right? See how we go, we touch the top of this one, but we don't touch the top of that one. So it's also important to have your I typically don't keep the previous day 1800s, but I will keep the previous day's 930. So I'll keep the 930 for the whole week. Right? That's one thing I will do. And so you'll see, right, all throughout the day where we don't um where we hit certain things and we don't hit the other ones, right? Or we hit certain levels and we won't hit the other level, right? You'll see your divergence and you'll see it pretty clear, right? So here, right? Boom. Here we stop there, but down here we go a little further, right? Here on that news scan at 1407, right? See how we tapped in here? But this one on ES we didn't. So you'll see this all day, especially if we range. Especially if we range. Here's another situation here, slightly above, right inside of it. Does that make sense to everyone? Didn't get to the 1800 box. We did here. Make sense? So this is specific for range days because I know a lot of times people in here may have issues with range days, right? So this helps you, right? This gives you basically to where you can pick and pop trades on, especially if you're trading futures. If you're trading options, you can either call it a day, right? Or you can wait to the end of the day if you're not necessarily as precise with your entries, and you can wait to the end of the day to trade options. And if when I'm talking about options, I'm speaking specifically for QQQ, SPY, SPX. I wouldn't really try this on other stuff, right? For in regards to like and stuff like that. Like you can still use a 930 print, but they don't have an 1800 candle. So that makes it a little bit more difficult. So it's specifically more so for NQ and ES, but you can kind of use it next to a QQQ or spot chart. Make sense to everybody? All right. So I'm assuming that's a yes. If y'all have questions, y'all can either talk or type. That's fine. And talk or type in the premium chat. All right, good deal. Okay. So remember, 1800 box of that same day, right? So, like for instance, now, right? I would probably remove this one You can keep this one from the previous day, right? Or you can remove that one. That's up to you. Um, but we'll just keep it for now because I've been practicing with it a little more lately. Thanks to Johnny, he made me, put on my. He asked me about it actually. All right, and then so we'll put the current one for today. Be good, John. Let's switch. All right, here we go. All right, so even here, right? You see how this one dipped lower than this, right? Could have taken as soon as we dipped, and you saw that it didn't. You saw that it was up here. You could have just taken longs and put your stop right below it, right? All right, so that's that. So the next thing that we're going to talk about the 805 candle. Um, I'm not sure, what everybody's account is like. That's between you and God and your spouse, right? Um, but what I'll say is, if you're looking for a strategy that can help, right, build your account, I believe the 805 strategy is one of those, right? And so what it does is, delete this. What you do is you go to a 5 minute, right, and you mark out the high and the low of the 805 candle on uh on Weeble, right? Now it only shows up on Weeble now, and usually it's a little bit more exaggerated than this. It's a little bit more exaggerated. But you can use this as your high and low, right? Of or not your high and low, but your supply and resistance for for trades, right? And so typically if we get a close below on a 5 minute, right? Typically get a dollar move in that direction. So let's look at this one. Let's see if we get a dollar move. So did we get one? We did not get one on here. Oh, actually, no, we did. Sorry. Got a little bit more than a dollar. Right. And so you'll notice here. So these are the ones that I put in, right? So 805 at a close below, right? Boom. 583 to 570. Over 100% play. Microsoft, right? We had a stop above, you would have lost. Then we had a close below. You could have taken that to manage your risk, but it seemed like this was a little more tight. Okay, NVIDIA had a close below 113 to 112. That's a dollar, right? Tesla, you have your 5 minute here. You would have actually been stopped out here. So, but then you could have taken it back up this way and made your money back, right? And so, what if you look at in my channel, right? I typically put the stats in there uh for it, right? So basically, these are the stats, and I highlight anything that's over 80% for the day, right? And it's basically, do we get a successful move in either direction, either the intent, either below or above, whichever one we close. So there's times where like Tesla has a 96%. It failed the first one, right? But then it came back and it actually was successful later, right? And it was a successful this one, 281, 294. Yes, barely. So you could have taken this down, right? And so for this strategy, right, you want to use the same position size each time. And typically, like I said, they're a little bit more exaggerated. Sometimes when you have news scandals, the news scandals can typically can try to be a little bit, will kind of shadow the candle. But let me see if I can find a good candle from what I'm talking about. So here's a good example. So here's a more exaggerated candle. 805 candle here. And so you'll notice, right, you'll get supply and it'll be used as supply, support or resistance throughout the day. So this would have been closed below 544 to 537. So Meta, Microsoft, and Tesla are like my favorite ones. And QQQ is pretty decent. Just FYI, those are the main ones that I would do, right? And I look for more exaggerated candles. Let's see if I can find one. It's been a while since we had. No, it's not exaggerated. I can go back. Oh, here we go. Jesus, don't do me wrong today, though. 805, where you at? Why, when you're looking for one, you don't get one? It's the funny part. They're usually very exaggerated. Sorry for the background. My old lady likes to laugh real loud when she watches TV. Like, all right, here we go. Here's an example of an exaggerated one. Yeah, that's a good exaggerated one. Here's another one, exaggerated, right? Now, if we open up too far away from it, a lot of times I'll let price come back up to it and you can take a reversion trade back up, but that's not part of the statistics, but you can do that if you kind of know what you're doing, right? But typically I like for them to open up within the box and then it's easier to manage risk. And so your risk, yes, so it can be at open bullpen. It's based off the first, so whatever first 5 minute candle closes above or below outside of that range is basically um your starting point. But like I said, if you have a situation like this, right, where it opens up way below and it opens up and it closes way down here, right? I probably wouldn't take this trade, right? Because it just doesn't make sense. The box is way up here. If we retrace, you lose a lot of money, right? So you could either take the reversion, although I don't have data on the reversions. I only have data on the close and continue, right? But or you could have waited until we got back in the box and got back out the box to take the trade, right? So here, right, we start in the box, we close outside the box, right? That would be a very good trade to take. Here, right? We open. I gotta figure out how to use there we go. So you have your right. So we start here open, right? We close, we finally get a close above, right? This would be a very good trade. Stop would be a close on the opposite side of the candle, right? Now, if you have a big enough account, right, you could, in essence, uh, size this for zero if you use the same, uh, uh, if you use the same uh, position size every time. Because there's certain days, and definitely like Tesla, Meta, and those ones, or certain days where like Tesla is like 96%, right? Each of those days, right? And it's I change this for every day, right? So if something has a 96% chance of moving at least a dollar, but the average is actually about $5, right? I can size for zero on this and just go with the statistic that 9 times out of 10, you know, I'm gonna at least my, make my, get to my intended expectancy. And so if you see like a 569, right, you don't have to target a dollar. You can target $2, $3, $4, right? Because this is the average. So like I said, this is a very easy strategy, right? That it's basically, hey, you plot your high and low. If you like the statistics that I put out for the day for that ticker, you look forward to take it, right? You can even throw MA on it, you can throw a MACD on it, you can throw some type of indicator to kind of give you additional confluence. Makes sense, everybody? Here's another one, right? So back in February, this Meta was on like a nice little run. You got your and so I enjoy trade. If I'm gonna trade options, right? Because I primarily trade futures. I'm gonna trade options, right? I'm gonna try to use this strategy on a Wednesday, Thursday, Friday when theta there's a little bit more decay in the contracts. So contracts are cheaper, right? I can get closer to in the money, right? Don't go too far out the money, right? Don't this isn't a if I say if I have a $5,000 account, right? I'm not going to try to go so far out the money to get a whole bunch of contracts, right? I'm going to build my account by just getting one contract that's in the money, right? And allowing the move to happen for itself, right? So say for instance you spent so say for instance this we're not close to this date so I can't do it, but 683 you get a 680 contract, right? You're in the money instantly and all this is just money in the bank, right? So for smaller accounts, it's better to trade this when you get closer to the end of the week so that the contracts will be a little bit cheaper. So if I have, like I said, if I have a $5,000 account, I'm not going to try to buy, 50-cent contracts with this, right? Especially if I'm trading meta. I'm going to try to buy something that's closer in the money, right? Like I said, a five, if this situation right here is 680, right? And then allow the contract to do what it does, right? Especially with the big movers, right? The big movers, and you just get one contract, right? One or two contracts. Don't try to like go super cheap to get 1,000 contracts when your count is small. One or two contracts and uh and go that route. Sell one contract when you get to $1, $2, or half the average move. Hold the rest, move your stop to break even. Or you can take your profit, right? Don't risk losing any money, right? And be okay with the trade and move on to the day. Now, once it hits $1, that's considered successful, right? But I do capture the whole move if we go to the whole move. So to kind of give you a better expectancy, a better average of how much the move potentially could make, right? But if we go move $1 and we go back in here, the stat is already considered success. So if it doesn't come back down, that's kind of on you, right? So if we move $1, and it goes back up, I probably wouldn't take that trade unless there's other things in confluence to say to take that trade. Like right here, it's a perfect example. So if you have your box here, right? You get a stop here, or you get yours closed down there, right? So you got your $14 move, right? If you decide to get in here, you need to be using other things to go with to give you confluence or the reason to go in there, right? It may be an SMA, it may be an EMA, whatever it is, you need to have that first because this will be already considered a success, right? Don't try to trade all of them. Pick one and stick with and just trade that one, right? And you want to kind of trade that one or at least if you're going to do this isn't when you're trading data, right? You don't want to just trade one day and call it quits, right? You need to let the data basically run its course, right? Because say for instance, if It says 80%, right? And this is over at least, close to a years worth of data, right? This is a Monday, right? Or this is a what? No, this was Thursday, right? Thursday, 87.5%, we take a loss. Friday, it says 80%, we take a loss. Monday, we take a loss, right? You have to realize that at some point, the 12.5% has to show up, right? But you have to understand, it's that data will eventually correct itself, especially when it's, pretty high percentages over a long period of time. So there's something called a risk to ruin, right? And that's basically how long it takes to ruin an account, right? No, let me take that back. Let me actually think about what I'm saying first. So you got your risk to ruin for every strategy, right? Um, for every strategy that you try, there's a risk to ruin. It basically says how much risk, right? Do I need to do I need to to dole out, right, to get past the ruin stage, right? But every time you go to a new strategy, right, you restart your risk to ruin. Every time you increase leverage, right, you restart your risk to ruin. If you're trading prop firms, right, or if you pay yourself, right, from your accounts, right, either or, every time you do that, you restart your risk to ruin, right? Typically about 14 days. So if you ever notice when you're trading, right, and you go on like a nice little run, right, at about the 14th day, right, you'll kind of, you know, shit'll kind of get a little weird, right? Like your trading kind of might get thrown off. It may be something in your life that throws you off or whatever, right? And then that's basically your risk to ruin restarting. And so what happens is most people will change something, right? Instead of just sticking it out and understand if you actually have proper risk management and you have proper position sizing, you can get past the ruin stage or you won't ruin your account. Let me say that. So here's another situation, right? You could long this, right? With your stop either right below this low down here, knowing that we're getting some type of color change here. Sorry to break off, but this is a perfect example here. Does that make sense about the risk to ruin, y'all? Yay, nay, yeah. Johnny, because you, I mean, like you, and anybody who's been trading a while, right? You'll know, like you'll go on a run, right? And you'll hit some speed bumps, right? You position size correctly, you'll get over those speed bumps. If you don't, those speed bumps will clear your account and blow your tires. Exactly, bullpen. Exactly. And people don't understand that, right? Even myself, right? When I exactly. And if you actually do a strategy exactly how it's supposed to be done, right? Then typically it'll work itself out. It's usually not the strategy. It's usually it's the trader, right? It's the user using the strategy, not like it's intended to use, right? Because there's plenty of people who make millions using the most basic strategies. There's plenty of people who use millions using intricate strategies, right? But the people who make a lot of money tend to stick strategy and not deviate from it, right? They have the discipline, right, to always take the same trades. They have the patience to always wait for those setups, right? So that's one of the differences of successful traders versus non-successful traders, right? And so even myself, right, I'm a very successful trader, but when I add something, I have to know that I need to lower my leverage, right, so that I can allow the working pains of learning something new, the hesitation that you may get, the anything that may change that inside yourself as you're trading that you did not have, that was that you didn't have to worry about when before you implemented whatever it was new, right? Or like when I tell people when they come in here and you're new, I tell people to don't admin hop, right? Pick an admin that closely associates with how you already trade or how you similarly trade, or if you're new, how you want to trade, right? And you stick with that admin and you learn from that admin. You pick that person's brain and you figure out how to best curtail what they're teaching you, and you to yourself, right? Because everybody has their own personality, and you still have to fine tune strategies to your personality, right? Into whatever you have. You may have certain traumas that you may have, growing up, right? From growing up, right? And you may not realize that those probably may show up in your trading, right? So you need to make sure that certain trading setups, right, or certain trading strategies go well with you as you get through those traumas as you're learning, as you're trading. That makes sense to everybody? Because trading will definitely pull the worst out of you. Good deal, good deal. All right. So the next thing that we'll go over is how I draw my fib. So every day, I don't want to here, go here. So um, remove these. So every day in the morning, um, pick whatever tick you want. We'll just go SPX. We trade a lot. Anytime we gap up or we gap down, there's a specific area where you can draw your fibs at, right? And what I like to do is I like to draw it from the 358 candle to the 930 candle on the 2 minute time frame once it closes, right? And, I, and so what I look for, right, is for price to hit these levels and reject or bounce off of, and I take trades off of them, right? And so this can typically be done on typically every ticker as long as we have a gap. Right? So here we gap down from 358 down here, right? And you'll notice that the price will react at certain levels, right? Within those, within the gap fib levels, right? They'll respond to it, right? And you can take trades off of that. So we'll just go through a couple of them. Let's see what Meta looked like. Meta was a big gap up from earnings, so it may not show too much. All right, so probably good taking trades off of here, back down, right? Let's see what Microsoft looked like. Microsoft won't show anything. Such a big gap. All right, here we go. AMD. All right, got your retracement down into the gap, push back up off the 50% of this gap levels, right? Came back, hesitated, pushed up, right? Big drop. So this works. So again, right? If we gap up, you draw from the bottom of the 358 candle to the top of the 930 once we close on the 2 minute. Now you can draw it on a 2 minute or a 5 minute. I prefer the 2 minute, right? Same thing if we gap down, right? If we gap down, you go from the top of the 358 candle to the bottom right? And like I said, and most times, unless we're just trending right, you'll see us react off certain levels. Even here, right? We pushed up, we had a reaction, came back down, and then we pushed up to close the gap. All right, so here we pushed up, hesitated, didn't get past, came back down, hesitated here, and went back up. All right. So remember, uh, and this works on any ticker for the most part, as long as it has enough value, right? If we gap down, top of 358 to the 930, right? If we gap up, bottom of the 358 to the top of the 930 once we close on a 2 minute or 5 minute candle. Any questions so far? All right, so let's look at a higher time frame. No question. All right. Let's look at higher time frames. And if there's any tickers that you guys want to look at that you guys are currently in, just let me know. But we'll just start with SPX. All right. And uh so SPX had a reaction basically off the 50% or close to the 50%, I'll say. Right. Actually, let's look at year 500 because that gives you a little bit more data. All right. So October 22 all the way up to the all-time highs in February. We had a very, very strong reaction off the 50% level of that move up, right? And from there, right, we had I draw my fib, right? We'll move back down. Let's go to a smaller time frame. We dropped down. We had a reaction here at this 50% of this leg, from this leg up or leg down. Came back, pushed back up. Now we're at that 0.618 level, right? And so we're seeing what we're kind of going to do. And one of the things that we are fighting against to go up is you have this here where price was pushed down off of, right? So, and we'll look at a 12 hour. So there we go. Session. All right. So two things can happen, right? We can continue pushing up, or we can come down, right? Um, Personally, with NFP, it gets a little dangerous, right? Because it can be a violet candle, and the market can respond either well against it or bad against it, and it doesn't even matter if it's good news or bad news, right? So personally, I'm going to look for price to do one of two things, right? Let's change this up a little bit. So we're at the 0.618 level here. If are to continue up, right, this will be my next level of important, this next box here, right? So 58.59 to 59.93 if we want to continue pushing up. If we want to push down, right, you have two things that you can look at. You can see, all right, so we moved up. You got this first 55.26. You got 0.382, 55.44, 0.5, 53.78. So what I do is my other box that I like to do for fibs is 0.5 to 0.618, right? So these are my two most important fib, I guess, boxes. Is the 0.5 to 0.618 and the 0.786 to 0.886. So I will draw those there, right? And I will, and actually, let me see what it looks like from here. Where are we at? So you see how this 0.5 to 0.618 is in that area, right? I will actually mark this as well to give me basically a double confluence of fib of concentrated fib levels, right? I'll remove that. And so now if we come down, I'm looking for price, right? To come down into one of these areas. If we push up, I'm looking for price to go up into one of these areas. Make sense so far, y'all? And so let me help y'all out a little bit. So now because it's on a 12-hour, right? It may take a little bit more time. I'm not expecting it to necessarily come drop all the way down here one day. It may come down, push up, come back down. You said, Heather, you don't understand? Okay, you good. Okay. All right. So that's pretty much what I'm looking for US 500. In Q, pretty much the same thing, right? If we go up, I'll be looking in this area, right? Or if we go down, I'll be looking in this area. If we go up, I will be looking in we're already at 0.5, 0.618. So I'll be looking for us to push up just in due time, right? But again, we did pop out of this here. We pushed back in, but let me remove these. So you have this situation here that we popped out of. Now we're coming back down. Now, uh, so now we can uh we kind of soup this in essence, fill a little area in here, right? And we can start making our way back down in order to fill this gap if we want to, right? Because I don't see any other gaps on the daily time frame that need to be filled going to the upside that are major, right? There's some little gaps in here, but not any major gaps. So I will believe, unless we just want to go clean up this whole side here, that this will be, let's see where we at on this field. Ah, here we go. Good little area for us to reject, right? And make our way downtown. I can't say no. But all right. So yeah, so I'll be looking for at some point for us to if we don't continue up and get past this level, right? For us to come back down and short this. But you never know with NFP, right? Because of the fact that like uh news does crazy things and we have a more volatile market. So expect the market to be unforgiving. Hold on 1 second, y'all. Any questions? Uh anything you guys want me to look at tickers specifically? Bullpen, anything that you're in, Heather, anything that you're in currently? Are y'all in, do y'all have any open trades? Or y'all all cash? Which y'all a little bit newer, at least for me. Oh, okay. I was in Mars swings closed today. I'm cash right now. Cash isn't a bad thing to be in. Let's go look at Mars. Mm, trade and Mara. Yeah, I don't know when y'all got it or not, but no, that was a nice little bounce up right here. I don't know if y'all got it a couple days ago, but I think it'll start coming back up. This TR is a little stronger. What's coin doing? Coin's not bad. Probably want to see it do something like this, so that and go. And then what I'll be looking at if I'm building this type of thing is I'll look for it to drop down in this fib here, right? And actually come a little lower. Come down here, zero point 0.5. You got a gap fill right here, and then we push up and catch all these shorts. Let's go through the swings real quick, see what y'all are in. Okay, okay, don't look like. Um, did he swing Amazon? Yeah, I think he swung Amazon. Oh no, Amazon had it, which wasn't bad. Let me tell you why it wasn't bad. Is because this is one. So here you got two things. You got an island type of like a downward island candle, and you had a gap up, right, off of a fib level, shot up. I gotta really start trading options again, y'all. And then here, right, bounce off the 0.382 level, shot up. Yeah, paper trading bullpen. I would say this, right? Paper trading for 14 days, right? Do the same exact ticker, right? Whether it's Tesla, Meta, whatever, right? Cream knows how like he trades it or he I know he looks at it. I don't know if he like trades it like specifically, but he follows it a good bit, right? And he knows that it can be powerful, especially on days when we get a good move, right? Uh One of the things that we are I'm currently working on, and this will be for future traders, right? How many of you guys are future traders outside of Johnny? Anybody? Dean, yeah, yeah. Sorry, Dean. All right. Okay, Heather, that's what's up. And I didn't even realize you was in class, to be honest with you, because you didn't type anything. But yeah, Dean, I know you. So one of the things that I'm working on is basically being able to give you guys playbooks to teach you guys or to for trading in Q. And so I've been working. Johnny's been um Johnny's been with me with it. Devo's been with me with it, and they've been my test dummies, right? And so basically, what it looks like is uh it looks something like this, right? It gives you the day, or gives you the up direction, down direction, right? And it tells you how successful each one is, and this is based off the 5 minute ORB, right? Um, and tells you how many setups, tells you what you should target, right? How many of those, if when we close outside or inside, outside of the ORB, how many of them actually retrace, right? And that's important. You know I got love for you, John. You know you my guy, man. But yeah, you have been my test dummy though. Shit, I've been my own test dummy. But then you got ones where there's a higher percentage retracement, right? And so when you see something like this where a higher percentage, right, you see a high percentage of it going in that direction, you will want to wait for a retracement, right? And so in this playbook, yeah, ask Confluence. In this playbook, right, you'll be able to, it'll tell you, it'll guide you what to do, right? So like this one, first entry success is 50%, second success is 60%. I certainly avoid without retrace or strong confirmation. Second entry recovery is weak, use extreme caution, right? So it tells you kind of what to do, right? Tells you where you if you're going to use a drawdown, stop where it should be at, right? And basically these are. I mean, I'm still working on this, but for the second entry, but for the first entry, this basically tells you your first target. 90% of the successful ones end up going point 12. 85% go, point 12. 75% go point 13. The median is about point 16, 0.165%, which this is about a little over 25 points or close to, yeah, 25 points on NQ. So that's $500 per mini, $50 per micro. So and then it tells you where you should tier at, it tells you how you should, what risk management you should have, and it gives you kind of a fast command in case you don't want to read all that. It tells you what to do, right? And it gives you the same thing for the down, right? And so typically how we trade it, right, is we go to AQ. And let's go to uh so we'll go to 3 a.m. right? What was that? Let's go kind of far back. 29. Here's your 5 minute ORB on NQ, right? So as soon as we goes over, you can either take the breakout here, right? It gave you 35 points, or you could wait until we get it back into here, right? And you could have got potential 47.5 points. Uh, and then close or failure, right? Is if we close on the opposite side. And since we only wicked it, you would have still stayed in this trade, right? Unless you have a specific drawdown that you are, that you have, right, based off the sheet. If we do fail, right, you just take it to the opposite side. You just use the information in that playbook to determine what you should do. So that'll be down the line, y'all, and I'll teach you. I'll kind of go through that more, right? As me and um, Devo kind of work through it, and I want to make sure it's bulletproof for you guys. It is specifically just for futures, right? It is specifically just for futures. And then you've traded with me a few times at nighttime. So like 3 a.m. So there's certain time frames that we like, right? 3 a.m., 9 a.m., 12 p.m. is pretty good. Uh yeah, 3 a.m. is amazing. Definitely Tuesdays and Wednesdays. Yeah, just to let you guys know, I'm at this point of my trading like career, I'll say I'm a specifically 90% data driven trader. I use other confluence like fibs. I'll use some MAs and some custom indicators that I have, right, to kind of help. But I'm specifically a data driven, trader. And some of that is like, because that, once I, got to a certain success, and I met my goal trading financially, I could afford doing the same position size, each time, right? So it allowed me to, yeah, 3 a.m. East Coast time, dog. Now. And so now that I'm a database trader, I can use the same position size for the most part and use data to basically make my money versus just use the specific technical analysis, right? Now I still add that as confluence, but you know, I enjoy trading with data, right? And using the other skill set I've learned outside of that to kind of tailor my entries, right? And so now, when you have data, you can focus more on your entries and allow yourself to get the best entries in order to, hit certain targets that you want to hit. But yeah, so this will be down the line. And yeah, and yep. So that's pretty much all that I have. Is there, like I said, is there any tickers and stuff that you guys want to go through? All right, going once, going twice. If there's any questions that you guys have, please let me know. Um, oh, the 350 candle, right? So in here, in this, where is it at? You guys can, if you're new, disregard these. You don't need these. But this 350 candle, right? So today, Thursday, right? There's a 64% chance that if the candle closed red at three on the 350 candle, that we would continue in that direction. So if we go to today, right, and this is actually for SPX. If you look at that candle at 350, right, we get a red candle and we continue down, right? So this is another thing that you want to use the same position size each time, right? Okay, it's good knowing billionaire that you trade. I forgot you trade futures too. But yeah, so that's another thing that you guys can use to help build your account. I would say that it's best to use this with a small amount of money, right? And not a lot, even if you see 70, 80%, right? So like May, right? Overall, May is pretty good if we get green candles at the end of the day at the 350, right? But it just wasn't that good today. So I'm expecting tomorrow. Let's see what it says tomorrow. Friday, green. So 67%. Let's see what it does. What it say is in May. So May is pretty decent for Fridays, right? With an average move of 6.79, $6.79. Outside of May, Fridays are pretty good at 67%. So and let me look to see what have we done the last couple of Fridays. We got continuation, reversal, continuation, reversal. All right, so yeah, if we get a, let stop this down. All right, so we haven't really went on a run with green candles in a minute. So we get a green candle tomorrow. I'm pretty much going to trade the 350 candle tomorrow. But all right, y'all. No problem, no problem. And usually I put this the stats out on in the morning, so it'll be out tomorrow morning. And once yeah, I'll start being on live. The thing about with like me, I'm just gonna be honest with you. There's such great traders in here that are great admins in here that call out trades for you guys, right? And so I I think it's best that like sometimes you only have one or two signal callers, right? But then you have other admins who can provide other aspects to you know, it's data, whether it's showing charts, whether it's talking to the other admin, saying what you see. And I kind of enjoy, or doing EDU. I'd rather teach you guys, as much as I can teach you guys, and have you guys learn from that way and be able to kind of take your own trades, build your own strategies and stuff like that. If you guys go see what like Devo and Johnny are doing, you know what I mean, and creating their own style and trading their own way. I think that's important, right? Because as much as I think that me and the other admins are going to live forever, right? We're not, and you want to be able to have that skill set and be able to do this on your own. You know, don't get me wrong, the call outs are bangers, right? And I understand sticking to that, but you know, make sure you learn as much as possible in case 33 is not here, only bag's not here, I'm not here, right? Or some of the other, Hawk, Clayster, right? All the, shit, Johnny, he be calling out stuff too. If we're not here, you want to be able to take a trade comfortably and confidently, and and make money, right? So look like we got some type of engine, some movement just now. You go look at that, y'all. So
Oh wow, that's a crazy move for Asia.
I wonder what happened. So we got our 5 minute box here, right? And so in Q, actually, it's not 5 minute damn box. Here we go. All right. So here's another example, right, of your divergence here, right? You dipped 50% here, basically uh hit the bottom and push back up. We close outside of here. Oh, we did. But yeah, it's nice move. But all right, y'all. I'm about to get with the family real quick, eat before I get back on and try to figure out what we're doing for tomorrow. Uh, y'all need anything, please, feel free to, message me whether privately or, uh, um, in my channel, and I definitely respond. So y'all have a good night. Thank y'all again for taking y'all time to show up. You know what I mean? That's important to not just me, but also to yourself and to your trading journey. So